One of the indicators that I'm offering for free on my website is volume sum day. I wanted to show you this guy in video in real time. This is one of the charts I like to look at. I like to look at the E-mini S&P and the E-mini Russell side by side and check out the differences and the divergences. Today we had a big gap down at the open. The red line is the beginning of the session. You can set this up on your chart under session bars colors. Let me know if you have any questions on that. But the market gaps down, and it's rallied all day. It's one of my favorite trades. Gap fill, it hasn't worked as much in recent times. Most of the time the market has been doing gap continuations, meaning where it gaps down and then sells off, or gaps up and then rallies. Today we had a gap fill. But the volume sum day is an indicator I really like. It tells you the difference between the up volume and the down volume. So it's summing the volume on each bar. If you click on each bar, you can see up volume down here at the bottom. The very last statistic under open, high, low, close, you see up vol and down vol. That's for that bar. And so take the difference in that bar and hit add it to the previous bar's difference. And it starts over at the beginning of each day. So the way this is set up, if the volume sum difference is below 0, then the bar is painted red. If the volume sum difference is above 0, then it is painted blue. And you can see today in the E-mini S&P, there's 80,273. It's changing in real time as I say this. 80,287. More up volume than down volume, which is in line with the rally that's going on. It's up 5.75 points, 0.5% on the day. The divergence you can see over here is in the Russell. You can see this. Well, we got a 5-minute and a 1-minute chart, so let's compare it on the charts. The total will still be the same, but you can see a little bit more pullback on the Russell. The Russell made its peak here, volume-wise, and it's pulled back a little bit. They've both pulled back in price just a little bit from the highs, but you can see more of a pullback in volume, which means there's a little bit more selling up here in the Russell. So looking at this strategy again today, we see the E-mini S&P making new highs, the volume making new highs. The E-mini Russell, it's close to making new highs, not quite there yet. 697 is the high on the day. But the divergence you see here is in the volume pattern. You've got like a 1, 2, 3 top pattern in the volume sum day, while there's a new high being made in the volume pattern on the S&P. So we'll see what it does the rest of the day. Looks a lot of times, these 1, 2, 3 tops can end up being continuation patterns, or they can indicate large reversals. But we'll see what happens during the day, and go from there. Alright, we had a lot of extra volatility in the markets today. We were looking earlier at how this volume someday indicator works. We were looking at the divergences between the volume and the price, the total volume and the price. See here, we were looking at this divergence. I called this a 1, 2, 3 top earlier. I meant a head and shoulders pattern. So as you see, this did become a continuation pattern for another 5.5 points, 6 points before it did reverse. It kind of called the reversal a little bit early, so you could have traded it as a continuation pattern. But if you did trade it as a reversal pattern with about, you would have had to use a 6 or 7 point stop loss before you would have seen a reversal at the end of the day. And we were looking at this reversal pattern around 697, 696.80, 697 in the E-mini Russell. So that's one way you could use it. There's a lot of different ways you could use this indicator. I'll be presenting more of those at a later time. But if you want to download this strategy, feel free to click on the following link.